is lead analyst at COFAS. Morning to you, Saijil. Before we go any further, there's a new acronym, and Nazipo loves her acronyms, the BRICS and the, what's it, the CIVET?
The CIVET.
Yeah.
The Fragile Five, the Delicate Duo. I have them all.
And there's a new one here. It's Colombia, Indonesia, Peru, Philippines, and Sri Lanka. You're going to talk about this to us. Yeah. She says it's the KIPS.
No, she says it's the PICS.
PICS, and I say it's the KIPS.
KIPS, SIPS, however you want to pronounce it. I'd go with that one.
Which one?
CIPPS.
You're going to go with his one?
Yeah, just for now.
Yay! Okay. Tell us about this. You know, what always strikes us is emerging markets, and these acronyms are actually useful because they differentiate. They say it's not just a mass of countries. So some of these have particular characteristics which make them common to each other and worth looking at. So what is your research telling us?
Well, basically what we're looking at is why were BRICS so dominant firstly in the last 10 years or so, and what has that done to the global economy. And in terms of having the previous Goldman Sachs classification of BRICS as an emerging group, a powerhouse to rival the West, we find that there's a definite trend that's no longer the case. They are slowing down in terms of their growth, and there's an emergence of other economies. Firstly, the ones that started to benefit from prominent economies, and dominant economies I should say, like China. The surrounding states, some of them have had huge benefit from China's growth in the last 10 years, and we see them now coming into prominence. So what we are trying to determine is, in the next 5 to 10 years, which countries are then going to come to the fore and replace what we believe is the dominant sort of emerging grouping that we call BRICS.
What are you looking at in these countries that you see as emerging contenders to BRICS?
Okay. Obviously there needs to be significant growth potential. So where we look at what has been sort of huge capital demands from these markets, but more importantly what we term business confidence. A business confidence index in that country, it needs to be progressively increasing. So people have better faith in these economies. Other than that, if you want to compete with nations like Brazil, Russia, India, China, very large markets, you need to have similar conditions for business. So similar legal structures, similar financial structures, and that's what we're looking at. Which countries are getting to that point at a very rapid rate.
You talked about business confidence there.
Yes.
Comparable business confidence index to our one. We've got a couple, in fact. So, I mean, some of these things are sentiment rather than measurable outcomes.
Yeah. Majority of them is definitely sentiment. However, it's based on tangible things like a ranking of the quality of education between in countries. It's tangible. Yes, it's a bit, you know, iffy all in the air, and how do you say that South Africa's education system is worse than the Kenyan education system? Yeah. But there are certain measurables in place that we can determine that, and we rank it on a global perspective. So looking at all the rankings together, being the social environment, the political environment, fiscal policies, legislature, etc., and combining all the rankings, we can more or less determine which country would be better placed for foreign investment, for ease of business in terms of being a Western large company wanting now to enter a Eastern market. Where would it be similar that you would have, you know, sort of protection on one hand, but also the gains from your investment?
Saijil, can you concisely say in a few points what makes KIPS or PICS better than BRICS for an investor who's looking at these two comparable groupings, if I can call them that?
Okay. Majority of investors are not interested in long-term gains. They want short-term gains. When I'm saying short terms, we're talking about 1 to 3 years, 4 years. So what makes them better immediately is that they operate from a very low base. There's a huge potential for growth in them. Whereas we're seeing at the BRICS, we are nearing that potential for growth, so there's a tapering off of it. So where you'd get a country like China over the last 10 years averaged around 10% growth in GDP year on year, now we're seeing it at 7.7%. Same thing with South Africa, averaging around 3.6%, and now we're projecting it to be about 2.5 this year. So there's definitely less potential for I'd say economic gain from an investor. And these other economies are offering it at a different percentage rate, whereas previously they were sitting at 2 and 3% growth on GDP year on year, and now we're looking at 5, 6, 7% growth. So that's the difference.
Growth needs to be funded, and one of our problems in South Africa, foreign direct investment, investors are uncertain and so on. So these are countries which will attract foreign investment, presumably.
Yes. The biggest thing is, prior to the emergence of these BRICS nations, the emerging economies, everyone wanted to invest in Western economies, in developed industrialized nations, because it was safe and we knew what it was about. After the 2008-2009 global financial crisis, we've seen people change their strategies, look at other opportunities, and learning about the investments in these emerging economies. So we have that base of experience, and it now makes maybe investment into countries like Vietnam, Philippines. Prior to this, you might look at that as very risky, but your learnings from investing in the BRIC nations, you can now take that and translate it into profits into the Pakistans of this world.
I mean, understanding that the PICs or the KIPs are not yet in a formal membership structure, how important is it for them to get to that point, such as the BRICS nations?
Yeah, I think what we've realized, and everything has told us, is being part of the group, even if it's just in namesake, is just as important as having formal trade relations, having, you know, extensive sort of documents and membership portfolios and a BRICS bank that is yet to bear fruit. It's more important than that, because each state needs to be treated individually. Each investment opportunity, you don't invest in a block, you invest in a particular business or a country.
But it does change the way people think, even if it's a totally informal name. Colombia, Indonesia, Peru, Philippines and Sri Lanka, so there's those. Kenya, Tanzania, Zambia and Ethiopia, along with Bangladesh, that's 4 African countries out of 5. Kenya in particular expected to grow. You say extremely difficult business environments. Why?
You don't have the same levels of protection as the first 5. So that's where the difference is as an investor. And what we note in these African countries is a huge potential risk from socioeconomic factors like potential for coups, etc., translating into the business environment. So from a sentiment point of view, you want to invest in a country that is politically more stable, and that's why these are at a lower level. There's less political stability, not in saying that it's bad, but it's worse than the previous 5. And that's where you have that lack of protection, and that's why that investor confidence wouldn't be as great. However, your potential for gain, for returns on your investment is much higher. So it's a case of balancing out what is safer compared to what's more profitable, and that's why we separated the 5.